Welcome to the Real Estate Show on KMED. It is December the 16th of 2017. Pete Belcaster and Joe Brett, the real estate guys, with you here in KMED today. And thanks for joining us. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED to talk about all sorts of real estate related issues and topics. And heck, we are at the end of 2017, Joe, and we never run out of things to talk about on this show. Our goal, of course, is that we want you, our listeners, to be smart real estate consumers. And if you listen to our shows over these last 8 years almost, we've covered lots of topics. And what I like about today's topic about 1031 exchanges is that it's a way to increase your wealth and increase your leverage of your money. And there's opportunities out there that exist all the time. And we talk to a lot of people who are into investing. And so this is a pretty good, appropriate way to do that.
And I think that the time is right because we've got a lot of people with equity in their homes again.
Yes.
That have the option and the opportunity to maybe make a move and move up or even downsize and do so with some options in mind of the gains that they're going to come away with, that equity that is so welcomely back now.
And as our economy improves and continues to do this, more opportunities exist. Esther Auerbach is with us today here on the Real Estate Show. Esther is an assistant vice president for Old Republic Exchange, and we call her the local 1031 exchange expert, I guess is the best way to describe her. And Esther also is an instructor for the Rogue Valley Association of Realtors, which is sponsoring today's show, by the way. So she teaches this, the things that we talk about today is what she shares with realtors. And so when we figure that she can share it with realtors, we should share it with you, right? Our listeners, right?
Our instructors are a gold mine of guests that we have siphoned into the show. And because it's so pertinent to realtors who then turn around and take this information and help their clients with it.
So Esther, welcome.
Thank you. Thank you, Pete. Thank you, Joe. Nice to see you both.
It's nice to have you here again. I would just ask you, are you busy right now? Are we seeing here in December, the real estate market, numbers always kind of slow down and things like that, but not necessarily, just overall. But tell me about what you've been up to. How are things going with you?
It is busy, Peter. One of the reasons I think why it gets a little busier towards the end of the year is because a lot of people want to close on their property before the end of the year
because of the tax year.
Right.
Oh, sure.
Right. Yeah. People who have different properties, a lot of different investment properties, might want to sell them in different tax years. Mm-hmm. And even though, of course, when you do a 1031 exchange, you're deferring the gain, you still want to be strategic as to when you sell them. So probably because of that, we're seeing more and more.
A lot of activity.
Probably a lot of investors had meetings at the start of the last quarter here with their accountants and their strategists, and there's some moves that you can make to strengthen your position at the end of the year. Yeah,
and of course also to save on taxes too. So it's all the thing out of that. So if someone comes up to you, Esther, and says, "Geez, what's a 1031 exchange?" Just for people who kind of not familiar with them, they may have heard that terminology, but just briefly tell us what is a 1031 exchange and why would I ever want to use something like that or use your service to do it?
Sure. So a 1031 exchange is the vehicle that enables an investor of real property, or actually an investor of property, period, to defer the capital gains taxes that are due when you sell a property. So in a nutshell, that's what it is. It's a vehicle to save money, to defer the gain and keep reinvesting so that you can diversify your portfolio.
Now, in order to do that, it's not my personal property. Now, let's make sure we understand that part. It's not like Joe can't sell his house and do a 1031 exchange on another house.
You're absolutely correct.
Right.
This is for investment properties only.
And investment properties, in your definition of those, are what? What would that include?
Actually, I'll give you the IRS's definition, which is the one that's important. Nobody really cares about mine. But the IRS's definition of investment property is property that is held for appreciation and or a trade or business. So that means that you can conceivably have property that's not being rented out, but still qualifies as investment because it's appreciating. And an example of that is vacant land.
Okay. Oh, vacant land. Okay,
right.
Sure. Okay.
Right.
So I had lots or something like that. I've had a lot. I didn't want the lot. It's helping me gain a better financial position, right? An exchange is made right to if I do this, I want to improve my position, right?
Correct. Yes, you want to put your equity to work. So let's say that you have an investment property. Let's start with the most obvious of investments, a rental property.
A rental property.
Right.
Okay.
So you have a home that's fully depreciated because you've owned it for many years, and all the rents have maxed out, and it's producing, the rate of return has maxed out. It's capped. So you want to, and all that equity is sitting there. So you want to put it to work for you. What you can do is you can sell it and exchange it for like kind, and that's a key concept, like kind, meaning that's other investment real property. And you buy, instead of having all the equity sitting in one property, perhaps you buy two or more, maybe a multi-unit building.
So come back again. So say if we had a rental, right, Joe? So we had a rental property, and we want to. I've depreciated it out, right? So I've already used my tax advantage of owning that property. I've depreciated in, say, a couple of years or 5 years or whatever it is.
Right.
So then you're saying that this is when I should then look at maybe doing something differently. But I could buy one or two pieces of property off of my gain, off of my sale of my one property.
Correct.
Yeah.
Yes, you can. And one thing that's important to remember is that whatever your investment was when you first bought the house, the property, you cannot segregate your gain or your initial investment from the gain. So when you sell an investment property, you're going to have to buy something in order to defer the gain fully. You're going to have to buy something of equal or greater value. Mm-hmm. Otherwise, you can do a partial exchange, but you're going to have some tax consequences.
Right. So you can do partial exchanges. In other words, but you're paying the tax of what you don't use. So if you only use 60% of your gain, then you'll still be taxing the other 40%, right?
Right. And actually, and it's important to remember again that you're not going to just have to look at your gain, but at the entire investment. So let's say that you bought something for $200,000 and now you're selling it for $400,000. Technically, your gain is $200,000, right? Uh-huh. But if you decide that you're only going to reinvest $200 because that's your gain, you're going to have tax consequences because you're buying down. You're
buying down. Right. You're not taking the value of what you got is $400,000.
Right.
So you've got to use the value in that, or you'll be taxed on that.
Exactly.
What do most people do? Do they take the advantage of the gain, or do they do such things like that?
Actually, the majority of the people take advantage of the gain, and what they do is they buy up. Most people buy up.
Most people buy
equal.
up or equal. Okay.
Equal or up. It's people when they, sometimes people when they get older and they decide that they want to use some of the money for different things. Sometimes it's for just for fun, to travel. Exactly.
Yeah.
Yes. Then they decide that perhaps they're going to buy down. And this way, they don't bite the bullet all at once. They pay a little bit each time, a little bit now. And then perhaps maybe they sell a large building and they buy two houses, and then they sell one at a time. That way they don't have to pay the gain all at once.
I could see how an investor that held a property, say, for 10, even 15 years, it's maxed on what it's going to rent for, and not a lot of hope for growth there, but you have depreciated and paid it down. Boy, you are sitting on a nice little pot of equity there, to where that's where that comes from, where you can get out of that and parlay that into two properties or a multi. And we are in such need of multifamily housing and affordable and just places for people to live.
Alternative housing is the term.
I hope it's catching some investor ears out there, and they know this already. That there's a real potential going ahead for that market.
So one of the things, if you talk about Joe, new construction, that kind of thing, there is a way. And we're talking, by the way, with Esther Auerbach from Old Republic Exchange about 1031 tax deferred exchanges today on the Real Estate Show. What you just said, is that true? So if I own some duplexes or something like that, could I? How did you say that again? How did you do that? How did you say that?
Just if you had a property that you had owned, depreciated, maxed out in rent, you've got equity in that. You sell it, and then you can you've got enough equity. You've taken in the rents over that period of time too, so that also kind of goes into your kitty, I would imagine, to where you've got a pretty good nest egg, to where you can invest in instead of just another rental property. You could buy two homes, or you could buy into a multi a fourplex or an opportunity like that, to where now instead of just having one rental, you've got four doors. You've
and
got
then when you do that,
rentals
say I've done that,
in your
then
mix.
What you said is correct. Then can I take, Esther, and then do I start again to depreciating my new properties, right?
Yes.
So then
you
I
do.
can start. So it seems like, from what I'm hearing, this is that if I'm at the end, if I'm an investor, and I own rental properties, and there's a lot of people that do. If I'm at the end of my time with them, as you say, I've reached the limit of what I can rent it for. It may need a lot of new updating and maintenance and deferred maintenance on it. I've used all my tax advantage out of it. That seems to be the trigger to look at then taking that and putting it into something new. Is that kind of a way that people should look at that?
Absolutely, sure. What they need to remember, though, is that when you exchange a property for another one, the depreciation schedule starts over with the new property.
Right.
So, yes. So, obviously, depreciation is something that when the property is sold ultimately and not exchanged anymore, the depreciation is recaptured. So, that's something to keep in the back of your mind.
What does that mean when you say recapture?
That means that you have to pay it back.
I got to pay it back. Well, I don't want to do that.
So to avoid paying it back, you just keep investing.
You keep investing down the road in another exchange.
Right.
So you really put it off to pay the taxes. Basically, when you die or you sell everything off, that's when all that tax on that particular property, your whole thing is going to come due.
That's correct. Actually, as the rules stand right now, the laws, if you sell a property in your lifetime, you will always have to pay the gain if you sell and don't reinvest.
Right.
So as long as you keep reinvesting, you'll never have to pay the gain. But if at some point you decide that you no longer wanna reinvest, you no longer wanna exchange, then you'll have to pay the gain at that point.
Because you've delayed paying that tax from that first time you did it all the way to the end.
Can my exchanges roll over to my heirs?
Yes, and that's the beauty of it right now.
Really?
Is that
they can't. I didn't know that either.
So if you leave the property to your heirs, of course, subject to the terms of your trust and what have you, you should definitely seek legal advice for that. But your heirs do not have to pay the depreciation. It's, I guess you can say, forgiven to them, not to you if you sell it. But yeah.
It's forgiven.
Yes.
And it doesn't happen often, let me tell you.
What a sustaining gift, though, to your generations to come.
Yes,
so they can then take the exchanges and continue to do that. But again, you always are buying like or better. But you can do like or greater. Or you can do equal or lower. You're just going to pay part of the tax that you don't use on the total.
Especially if these are income-producing properties. Theoretically, by the time it is to pay the taxes, or that time comes, you've made enough revenue from the properties. That's not a problem. You plan for it, and it's there. But
absolutely,
you said the number one exchange are rental properties.
Yes,
I can see a lot. I mean, look how many people have properties and know what they're doing, and so that's number one. What other types of exchanges can I do that's out there? People may own, or you inherit, or who knows what you get.
Actually, one thing that I don't want to forget to cover is that you can exchange real rental property for industrial or commercial. So it doesn't have to be just rental.
So if I have my rental property again, so if I don't want to do a rental property. My investment property. I don't want to do another rental. I want to go into a commercial. I want to buy a commercial building over here. You're saying that you can do that.
That is correct. Yes, that is.
Is there a penalty or anything to that?
No,
nothing. It's just you can do that.
That property also meets the definition.
Well, I would think that would open up a lot of opportunities for people to get out of the rental kind of thing and into something more commercial.
So could we sell our houses, build a Table Rock Sports headquarters?
No.
And live in it? I was thinking out loud here.
I don't know if we'd have enough. I don't think there'd be enough gain.
I don't think there's enough gain. We need a headquarters to do that. The problem. Yeah.
Well, it's really fascinating to hear, the different opportunities that people have. What other? Besides what other ones are out there that people are exchanging for right now? Sure.
So a couple of things that people need to remember is that there are different types of exchanges. Obviously, the one that most people think of is real property, and it is by far the largest one. But there are also personal property exchanges.
Personal property exchanges.
Yes. And that
personal property. Okay, all right.
That's when you have personal property that's not real estate.
Right.
Yeah. So, and sometimes you can have a mix of the two. For instance, if you have let's say that you have a farm and you have acreage that's being used for farming purposes, but you also have a house that sits on the land.
all right.
So the house itself can be the real property, and the land, if the land is being used for cultivation of any type, you can, for instance, a vineyard is a good example. Perhaps you're selling a vineyard and there's grape on the, there's fruit, or an orchard where there's fruit on the trees. So you might want to sell the fruit separately.
Interesting.
And that constitutes personal property,
And you,
not
can
real property.
and you can exchange that
Yes, you can.
for property.
The only problem you can, but
Okay.
the problem with personal property is that the definition of like kind is a lot more strict than it is for real property.
Okay.
So,
Yeah, well, hold the thoughts because we got a break coming up here. And I also want to ask you about 1031 reverses, you say, and 1031s you can do new construction with. There's so much to 1031 exchanges that it just get into it. It's fascinating to find out. We're with Esther Auerbach from Old Republic Exchange, the real estate show here December the 16th. Pete and Joe are coming right back right after this. The Real Estate Show continues here on KMED. December the 16th is our date. Pete Belcaster and Joe Brett, the real estate guys, with you. Hope you're having a terrific holiday weekend. Lots of parties going on. Do drive safe, all that kind of good stuff. It's a fun time of the year. We've been celebrating the holiday season since Halloween. We go till the Super Bowl around here, so we're only halfway through.
I've learned to kind of pace myself a little bit through there, but we are really hitting some good times with all the Christmas get-togethers, and it's just great opportunities to mix with family, friends, and our colleagues. It's a good time of the year.
Fun time, and we need it, to get the people come together, and we're doing.
I'll see you back at Anytime Fitness in January, I promise, because I'll need to.
All right. Well, today on the show, Esther Auerbach from Old Republic Exchange is with us. She's a 1031 exchange expert, and people don't know this. If you talk about 1031 tax-deferred exchanges as we are today, we can't do those. You as a company, this is what you do. You are the person. Say if a client comes to me and says we want to do a 1031 exchange, I'm going to say, great, we've got to go find a piece of property, but I'm going to turn them to you because you handle the paperwork under the federal law, right? Is that how that works?
That's correct.
Because I wouldn't want to do it the way it goes.
No, the IRS requires that you have a qualified intermediary. That's what we are. Some people call us qualified intermediaries, facilitators, and that's what accommodators, and we are. That's what we do.
And another thing that changed with that is regarding if you want to do an owner carry. You want an intermediary. What are they called? I can't get. There's an accent for that. But anyway, you have to have that also anymore, which is smart because these are big things.
They are, yes.
A lot of money is involved, and you better have somebody who knows what they're doing to do those types of things. Anyway,
protect yourself.
We talked about them, Esther, but there's time limits involved here. In other words, I can't say I'm going to sell my rental over here and I'm going to go take the money and then I'm going to go do exchange over here sometime when I find something. That's not the way it works, right? So tell us that.
Well, very good. First of all, you cannot touch the money. You cannot have actual or constructive receipt, meaning that even if the money goes into your account and you never touch it, the fact that it went to your account constitutes constructive receipt.
Right. Ooh, okay.
That's why you have to be involved.
Right.
So you never even touch it. It just goes that way. Okay.
And that's why the exchange has to be set up before you close escrow on the sale, because if it's already closed, it's too late, and you're just going to have to.
Say that again. Say that again.
The 1031 exchange has to be set up before the closing of the sale
of the actual sale of the property. Okay.
Right, before
you can't
it
do
happens.
it afterwards.
No,
okay.
you cannot do it afterwards.
Now, what's the time limits involved? Because I just can't come to you and say I just sold my place. I've closed it for 45 days. Well, no, you can't do that. You can't. You have to set it up before you do that.
That's
right.
right.
You answer that question. Okay.
Yeah. And you're right. Thanks for bringing that up, because there are deadlines, very strict deadlines. There are no extensions, and you have to, from the date that you close escrow on the sale of your property, you only have 45 days to identify the property or properties that you're going to be buying to replace it.
Okay, 45 days to find the property or 45 days to close?
45 days to find it.
Identify.
I have to identify the property. Do I have to have a deal set? I don't have to close it, right? I have to have a deal set.
You don't have to close it, and you don't have to be in contract. You don't have to, you just have to tell us. There are specific forms that you have to fill out identifying the property in writing, and that's all that you're required to do.
That's it.
However,
Okay. All right. Oh, however, okay.
in this market, when the inventory is so low, we highly recommend to people that they start looking early on so that by the 45th day, not only have they identified the property, but they've already gone in contract and have done their inspections. Because by doing the inspections,
Okay.
they obviously minimize the chance that something might go wrong.
Okay.
Because if they run out of time, if the 45th day comes along and you have not found the property, you have not identified it, it's too late. There are no extensions.
And so you're going to be taxed on that gain,
Full amount.
if you don't if you don't have that done prior to
That is correct.
So you got to be smart then. So in other words, you really have to tell your real estate broker, if you're going to do a 1031 exchange, you have to come up with the front end and start immediately there to start working to be able to satisfy the needs of someone like Old Republic. I mean, the document person.
Right. Yeah,
Wow.
to satisfy the needs
And
of the IRS.
do people,
really.
yeah, the IRS. But do people fail that? I mean,
Rarely.
Rarely,
It's surprising. Very few people. I would say that in most cases, of course, there are always exceptions, but in most cases, the people who don't find a property is because they were not. Something happened along the way that made them decide that perhaps they didn't want to complete the exchange.
okay,
But the people
okay.
who are really intent on completing it, they find something.
So what
majority
I'm
of the
hearing you
time.
say, those who are doing 1031 exchanges are prepared and knowledgeable about what they're doing, so they don't run into that trap. They're getting the properties identified up faster, getting them to you, right? I mean, that makes total sense to me.
And
Yes.
what if I've done my due diligence as a seller? I've identified a property. I sell my property, and the clock starts to tick. And it took me 15, maybe 20 days to get an inspector to the property, if I can even get that far, get into contract. What if I've got to 45 days? I just have gotten into contract. I haven't gotten an inspection. And what are the outs maybe if I have to step back and say this is not going to be satisfactory? I'm going to have to look for a different property.
The outs are that there are two different methods to identify properties, and both methods allow you to identify more than one. So let's say that you're planning
okay.
on buying only one. If you only identify one and that doesn't work out and you didn't have a backup, then you're out of luck.
Wow.
So I
That's
should
good to know.
so I should identify. I can identify multiple properties.
Yes.
I didn't know that either. Okay, that's good to know. I didn't realize that.
Yeah.
Okay.
And so
I'd be smart to do more than one, wouldn't
Absolutely.
you?
Yes.
Wouldn't you do?
Absolutely,
Okay.
because you want to be able to have a backup.
What's the most you've ever seen?
Well, actually, there are regulations. There are limits.
Oh, okay.
So there are two different methods, as I said. The first one is really simple, very clear-cut. It's called the 3-property rule, and that's exactly what it means. You can identify up to three
Up to
properties,
3, okay.
regardless of the value. So the only
okay.
thing you need to remember is how many? 3.
3.
That's simple.
Yeah.
But if that doesn't meet your needs, then you can use the 200% rule. And that method is a little more complex in that because you can identify as many properties as you want as long as the total combined market value doesn't exceed 200% of what you sold yours for.
Oh, okay.
So that makes it a little more complex. And I have to be honest,
I wouldn't do that.
on the West Coast where our values are so high,
Okay.
Wow.
most people don't benefit from the 200%
I wouldn't
rule.
think that
Good
would be.
No.
I would,
point. Really good point.
I
Yeah.
wouldn't. That doesn't
Yeah.
sound very
No.
good to me
No.
either. Yeah. Interesting though that those are even out there to do. So okay. So again, we want to come back and make sure that our listeners are aware that a lot of people have investments. So you can take your rental properties. You can invest into multiple properties. You can invest from that rental into commercial properties.
Yes.
What else is out there that people can do these with?
And
now?
actually, let me just clarify one more thing. You can sell multiple properties. Let's say that you have 2, or maybe 3 or 4, and you just want to have fewer. So you can combine the proceeds from multiple properties into one, or vice versa.
So if
Either
I
way.
had
Yeah.
4 or 5 rentals, and I wanted to sell them all at one time, selling them, how do you get the money out of that thing? But then you can buy.
I want to buy a commercial
property, or I can
or
buy
an apartment complex.
Yes.
or whatever you want out of that.
Yeah.
And people do that.
They do, and
Yeah,
there are multiple.
That's a smart
Yeah,
use.
it really
Yeah,
is.
there
yeah.
is a lot of flexibility. The only thing that people have to remember is that you have to replace it with what's called like kind. And the definition of like kind is it's pretty straightforward when it comes to real property. It has to be real property for real property. However, one thing that people get confused, and this comes up a lot, is people who want to buy land and build on it with 1031 exchange proceeds. That only works if it's structured as a construction exchange, which is a little complex, which we're going to talk about
in the next segment that we got coming up here.
Right.
So the differences of what you can do in
It's nice
this
to
is
have
what
options.
investment.
There's a lot of options.
Right. This is what we talk about this for years about investing in people to invest in properties, and many of our listeners who told us that they've invested in a rental, these types of things. This is a great opportunity to really improve your situation.
Absolutely.
And this takes it
And
beyond just investing 101. This is where you're building wealth.
But what from Esther is saying, you got to be aware of it. You got time limits. You
Right.
have all things to follow. And if you don't, you're
Need
going
a
to get
good
messed up. But if you are smart, it can really advance your wealth position, which is what we want you to do. Wait, one more segment to go in the real estate show. We're with Esther Auerbach from Old Republic Exchange. 1031 exchanges is our topic. Pete and Joe, the real estate guys, we're coming right back right after this. The Real Estate Show rolls along here on KMED. Happy holidays to you all here on the 16th day of December. Halfway through the month. My God, Christmas Day is like a week from Monday.
And you know
that?
how much I like our Klamath Falls roots.
Yeah.
I like nice fires this time of the year in the evening.
Well, it's cold enough
It
to,
is.
boy.
Yes, it is.
But, we need some snow. We're going to go back to that again.
Yeah.
We need some moisture.
We need to get skiing and snowboarding on Mount Ashland.
Yeah.
It's
strange. Every year is different. I don't care what.
you probably didn't
talk about this.
You probably didn't go out and watch the meteor shower this week, did you?
Missed that on my agenda.
I should have
It's okay.
taped it for you or something.
Oh, okay. Today on the Real Estate Show, we're talking with Esther Auerbach from Old Republic Exchange about 1031 exchanges, tax deferred exchanges. And boy, we learned a lot today from you, Esther. I got to tell you, it's a fascinating topic that a lot of people are obviously doing. And the thing is, we're telling you got to be aware of what to do and that kind of thing. Could I exchange a property for a cannabis farm?
Actually, you can.
Really?
Yeah, there are. That's as you know, this is becoming more and more common.
Yeah.
Yeah. So it depends on what you can exchange. Depends on the particulars, because a cannabis farm might encompass both real and personal property, because remember,
the cannabis would be personal property, and the land would be the other property. Sure,
correct.
Okay.
So it depends on the state of the farm. If you're buying the land to grow cannabis, but it's not producing yet,
you can do an exchange on that.
You can do an exchange on it, and it's all considered real property.
It's all real property. So I'm having one thing is that like property is basically property.
Yeah, real property.
It doesn't matter if it's a house on it or not. or a big thing or a little
Commercial,
thing. It's just property, right? That's like property.
Yes,
so, I've always had a different view of that, but I'm hearing it's just property, property.
The best way that I can explain it in simpler terms is real property for real property.
Right.
Just real property for real property.
It doesn't have to be like the other property.
It
That's
doesn't have to look like it. It doesn't have to be the same value of it.
Right.
It's just like property.
Doesn't have to be a 2-bedroom, 1 bath.
Okay, let me ask you a couple other things before we're going to run out of time, Esther.
Sure.
What is a 1031 reverse? What would that mean? I've heard that term. What is that?
So what that means is that you do the exchange is done in reverse order. So normally you sell your relinquished property. We refer to it as relinquished, the one you're selling.
Okay.
And then you acquire your replacement property. Second, first you sell, you get the proceeds to the title company gets the proceeds and sends them to us, the qualified intermediary.
Because they don't touch the money. We got that one. Okay.
And then when you have identified your property, you're ready to close on it. Remember, you have 180 days to close on the replacement property.
After I've identified my 3 properties, I don't want to do one. I want to do at least a couple, 3. Okay, do 3. And I reach it. I don't have to reach a deal. I just have to identify them within 45 days. Then I have 180 days after that to close, right?
Actually, no. You have, in addition to the 45 days, you have 135 days. The total is 180 from day one.
Total is from the first day I say I want to do an exchange.
From the day you sell, you close on your property.
The day I contact you and say I want to do a 1031 exchange, I have 180-day total to get through to close?
Actually, from the day that you contact me, you have a little more because you're going to need to contact me before you close on the sale.
Okay.
At
All right.
least a couple days before.
Yeah, it probably would be
Right,
good. Yeah, okay.
right. So
But
from
that's
the
what
day
you've
that
got.
you close, from the day that you close, that your transaction closes, the day that your buyer is the new owner, that from that day on, you
Okay.
have 45 days to identify the property
Okay.
and 180 days to close on it.
To close on it. Okay. Can I do an exchange? Say we have, Joe, we have a lot of people building. Can I take an investment property? Can I do an exchange on new construction, or if I want to get into some new construction? What is the rules there?
The rules are, remember, this goes back to like kind. So if you buy land and you want to build on it, you need to set, in order for you to be able to do it, we need to set up a construction exchange for you, or improvement. We call them
construction
improvement.
exchange. Okay, all right.
Because the minute that you acquire title to that property, if you acquire title when it's only land, then you're buying just the land. And the construction materials, until they're already on the house, they're not real property. They
not
are
real
personal
property.
property, right?
Oh. Do people do those types of exchanges?
They
Do you
do.
see construction exchanges?
Yes, they do. And I have to say that a construction exchange is complex and more costly because there's a lot more labor. They're a lot more labor intensive. So before people decide that they want to do that, they want to talk to me.
Right,
I
would
want to
say,
make
yeah.
sure that they understand what's involved. Sometimes people think that they want to buy vacant land and build on it.
Right.
And when they
Yeah.
realize what's involved, they decide that maybe they better find something that's already
Well,
constructed.
you
That's
gotta find
already
some-
constructed.
Unless
yeah.
you can build it yourself, you better find someone who's able to take that job on and do it in the time frame that's allotted.
That's correct, because yes, you're still bound by the timelines, by the 180 days to complete everything. You're also bound by the identification.
Well,
You have to identify.
You say you're bound by the timelines,
Yeah.
and right now, new construction with what we've heard about delays and
And
Just the
permits
need
and-
for labor.
Yes.
Oh,
just
yeah.
the building
Yes.
materials themselves. You may not be able to get that done in 180 days.
That's correct. And then, of course, the weather. You also have to take
And
the
the
weather
weather, yeah.
into account.
Yeah.
So.
7 new items on the Medford Planning Commission agenda Thursday night going
Yeah.
into the holidays, and it's going to continue that way after the first of the year.
7. What kind of planning actions?
All kinds, yeah.
For
Yeah.
new constructions,
Subdivisions,
new subdivisions,
zoning
everything.
changes, everything under the sun. Yeah.
Well, we're seeing our economy is such right now
Yeah.
that there's enough going to demand and there's enough money being lent. So we're going to see this kind of thing for a while. I don't think it's. I don't know. I don't think it's going to stop for a while.
Nope.
I think it's.
We
And
don't
our-
want it
and
to
our
stop. We
regions
want it
are
to
growing.
continue.
Yeah.
Yes.
Yeah, I just worry about valuations rising too fast,
Sure.
things like that. Josephine County is a big market right now. It's really hot market.
Yeah.
There's a lot of
Lot of value
activity
up
going
there,
on. The
yeah.
values going up and things like that. So it's a dynamic time. And
Yes.
again, so when you look at 1031 exchanges, and your company is, again, you're the intermediary, Esther. You're the person that writes all those things up that you have to deal with in order to pull those off.
That's
And,
correct. We have
yeah.
we have to observe the guidelines, the IRS guidelines. Yeah, and so the safe harbor rules, as they refer to them.
And how can someone get a hold of you if they want to find you?
I'm right here in the Valley, and my number is 541-708-6228.
You can Google Old Republic Exchange because I've done that and I found you. So
Yes.
Esther Arbach, because just to talk to you would be real. I know you'll talk to people. I've sent clients to you to explain some of the different things as well. So it's certainly an option.
Boy, it's
And
such a
if you
big,
got-
and it's
rather
such a
pay
big
taxes-
transaction in your life that
Yeah.
you've got to get it right.
Yeah, you got to. And look how many
Absolutely.
people are doing it. So, Esther, thank you. Happy holidays to you, too, and to
Thank you, Pete
your
and Joe.
family. And yeah, we'll
Thank
see you
you.
soon again. We'll come back in the 2018 and give an update again and see what's
Absolutely.
going on with that.
Yes.
Don't forget, you can check out any of our past shows at realestateshoworegon.com. They're available free of charge. Some terrific past shows, including such things as John L. Scott Market Watches, property taxes with the assessor, environmental engineering, all sorts of things. Please check them out. Today's show, by the way, was presented by the Rogue Valley Association of Realtors. You can check them out, roguevalleyrealtors.org. For Pete and Joe, hey, have a great week, everybody. We'll talk to you next Saturday right back here on The Real Estate Show.
You've You've been listening to The Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshoworegon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making the Real Estate Show part of your weekend.